and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about the cues for trade, the auto earnings, Tata Consumer's strong Q4 show, and the earnings that are expected today. And we'll also get all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our live feed, and we will take them up with the expert. But before we do all that, let's take a look at the top headlines at this hour. Wall Street sheds nearly 2%, led by Nasdaq, while yields too slide on mixed economic data and corporate earnings. Shares of First Republic Bank slide nearly 50% as it loses over $100 billion in deposits. Stock futures, however, rise after Microsoft and Alphabet report better than expected earnings. Asian markets are largely lower this morning. The SGX Nifty 2 is hinting at a flattish start for the Indian market. Meanwhile, Brent crude is back near the $81 mark. Bajaj Auto's margin expands for the third straight quarter to hit a 9-quarter high as earnings beat estimates. Tata Consumer too delivers a strong quarter, reporting a beat on all fronts. Maruti is expected to report a good quarter with higher volume and price hikes aiding revenue growth. A strong quarter is also expected from Bajaj Finance with healthy growth in assets under management. Well, with that, let's first take stock of all the auto earnings that are in focus today. So we are joined by Mitul Shah, who's the head of research at Reliance Securities. Good morning, Mitul. So good to have you on the show. Let's first talk about Bajaj Auto earnings that came out post-market last evening. So, margins have been fairly strong, 9-quarter high. This morning we've got brokerages coming out with positive calls and, upping their earnings estimates on the stock as well. But exports remain a spot of bother. What's your take on the numbers that Bajaj Auto reported?
Yeah, hi, good morning. Bajaj Auto's numbers were reasonably strong. In fact, it was beating estimates across the count, be it a revenue, be it a margins or even bottom line. Despite lower non-operating income, net profit was also significantly up, primarily because of the operating margins. So margins improvement of more than 200 basis and more than 100 basis than the street expectation is a really key surprise. And within this, pricing power seems to be slowly now coming back despite there is a slower recovery. So company is moving towards better product mix, richer product mix that is helping on the pricing as well as margins front. That would continue probably for a short term. But going forward, we believe that situation would normalize to some extent in second half with again entry-level bikes coming back to the normal situation. And margin may not expand beyond this, so margin would remain around this 19% kind of a level for next 1 to 2 years. But as you pointed out rightly, export is the main profit driver or a main business driver for the company, which still remains laggards and which we believe that would not get recovered in just 2-3 months. It will take another half year or another like 2-3 quarters to come back to nearly normal. But despite some recovery expected in second half of FY24 on a full year basis, we believe that overall export would remain at least 25%, 20 to 25% below the peak level company recorded in FY22. So that's where we are not very comfortable, or we would not remain very bullish on the stock. We downgraded it to hold yesterday.
Right, downgrade coming in on Bajaj Auto on the back of weakness in exports. But the stock has run up quite a bit. If you look at it, it's up over 20% on a YTD basis, and it had hit a record high as well. So you think much of the upside is already factored in the stock, even given the fact that it has still managed to report strong set of numbers, and any kind of a target that you are looking at on the stock from a 12-month perspective?
Yeah, that's right. That's what we highlighted in our research note also, that we upgraded stock in October 22. From that, it has moved up nearly 25% compared to Nifty, largely remained up with just 2-3%. So strong outperformance of 20% in last 6 months is the main reason that upside would be hardly 5 to 7% from current level, and risk reward may not be very favorable the way it used to be a few months ago. So most of the positives gets priced in at this level with a limited upside, and that's why we are downgrading it to, we downgraded it to hold recommendation with a target price of 4650.
Right, 4650 is the target from Reliance Securities on Bajaj Auto. Let's also talk about Maruti. The company is slated to report its earnings today. And, margins are expected in the range of 10% or thereabouts. Automakers have already taken price hikes. So, do you expect a steady set of numbers from Maruti as well?
Yeah, Maruti volume growth came in on a YOY as well as Q-on-Q basis. So numbers in terms of volume performance was reasonably strong. Product mix was not great because again this time passenger car segment is also getting some recovery as compared to earlier. Only the top end SUV segment was contributing to the growth. Margin improvement will be there because of this raw material being benign, and what we have seen in case of Bajaj Auto's quarterly performance. Similar benefit would come to all other OEMs, including Maruti. But from that level, still we believe that going forward, this way product mix is changing. Upside on the margin would be limited for Maruti Suzuki as well. Though on a very low base of last year, we may see more than 50% jump in net profit and maybe around 25-30% jump in EBITDA level due to margin expansion. But on a Q-on-Q basis, this kind of a growth would be much lower than this reported in the going to be reported on a YOY basis. YOY will get benefited from the lower base.
Right. Mitul, let's also talk about Tata Motors. We've seen JLR sales volume coming in pretty strong. And, the company has also, lined up fairly aggressive EV expansion plans, given the fact that, it will be investing somewhere around 15 billion pounds over the next 5 years. And it has lined up a couple of launches over the next 2 years as well. Do you think this will be, an overhang of sorts on financials in the short term? And what is your call on Tata Motors?
This 15 billion pound capex over 5 years, that is nearly 3 billion per year, which used to be a average capex, annual capex for JLR pre-COVID level. So 3.5 billion was not very high capex. It was nearly normal. And the way company is improving their product mix, volumes, margin territory now reached to a double-digit EBITDA level, and which we expect to be sustained going forward with a better product mix and better volumes. Also, the pricing improvement is helping on the margin front. There is a very low discount level now compared to the earlier levels. So, considering all those things, we don't believe any major problem in terms of funding the capex for next few years. And companies investing into the EV electrification primarily. So that is a need of an hour. Everyone is investing in that, and to survive for the survival, this kind of a investment is very much certain for any company, particularly in the luxury car segment who are operating globally. So cash flow companies is for guiding for a positive cash flow in next 2 years, and net debt would be zero kind of a number. Though it may not happen so soon, and we remain slightly conservative. But still, we expect sizable improvement from current level in terms of the cash flow as well as on the net debt side, despite such a high capex.
Right. Well, Mitul, with that, thanks a lot for taking out time and sharing your thoughts with us this morning. Well, let's now shift focus to some technicals then. We're joined by Nilesh Jain of Centrum Broking. Good morning, Nilesh. Thanks a lot for joining in. But this morning, cues coming in from SGX are not very encouraging. It's in the red and, hinting at a downside of somewhere around 20 odd points also. And even yesterday, it was a seesaw session, but we ended pretty flat around that 17,750 mark. So, what are the kind of support and resistance levels you'll be watching out for in the index in today's session?
Very good morning to you, Nandita. See, in last two consecutive sessions, we have seen some sort of a short covering in the Nifty and Bank Nifty both index. And if you look at on a daily time frame chart, the Nifty index has respected and defended its 200 simple moving average, which is now placed around 70,625 odd levels, and that is acting as a major support zone. At current level, although the risk and reward is not favorable for the long position because we have immediate resistance of 100-day moving average, that is placed exactly around 70,830. So we need a decisive breakout above 17,830 to 850 zone for any sort of further short covering move to continue towards 18,000. And even if you look at the derivative data for the monthly F&O expiring this week, tomorrow. So that data also shows that 17,700 on the put side has the highest amount of open interest, whereas on the call side, highest wise place around 70,800. So there is a very tight range of 100 points for the Nifty index for the day, and from expiry point of view, whichever side it will break, we can expect another 100 to 200 point follow-up move in that particular direction. But for the day, I believe, looking at the global market, we may see a subdued start and a consolidation for the day. The range, as I mentioned, is very much intact of 17,700 to 17,830. And on the lower side, if at all we see any decline towards 17,730, that could be a good opportunity to make a fresh entry. So it's sort of a buy on decline sort of market. And Nifty, I believe any decline should be a good opportunity to make a fresh entry. And we are expecting some sort of a consolidation, not expecting any major up move or major downtrend.
Right, those are the levels to watch out for on the Nifty. But let's also talk about the stock of the day. For me, that is Tata Consumer. It reported a strong set of numbers, a beat on all counts. In fact, if you look at the Q4 profit, that was up over 21%. The highlight would be the international business margin that that jumped on a quarter-on-quarter basis. And when you look at the India business, even that recorded a strong growth, and margins on a consolidated basis came in at 14.1% vis-a-vis 14% on a YY basis. Tata Consumer on Monday, it saw a sharp surge of somewhere around 5% or so, and even yesterday it was in the positive territory. Do you think much of the upside is now factored in, or do you expect the stock to react positively to earnings in today's session as well?
Absolutely. Well, if you look at on Monday, the stock already has reacted and priced in the earnings. And looking at the overall major structure in last 1.5 years, we have seen a lot of consolidation, a lot of gradual decline was also seen. So I believe the downside somewhere seems to be protected, but we may not see any V-shaped recovery from here on. But yes, it looks good from a position point of view. One can definitely add in the portfolio. From FMCG basket, this has been one of the underperformer, but now from here on, I believe there could be a gradual up move we can expect. As far as levels are concerned, the immediate hurdle of 200 exponential moving average that comes around 750. So that needs to be taken off for any sort of base formation and short-term bottom. But as of now, we can expect a pullback to continue. The structure from risk and reward perspective looks positive. 700 is the good support. That should be the stop loss for the long position. From position point of view, from next 6 to 8 month of point of view, I believe we can expect the levels of 800.
Right, so that's the call on Tata Consumer. We have a query coming in on Marico as well from the FMCG space. Abhilash S has written in and wants to know whether it's the right time to buy Marico. If you see Marico yesterday, it was up somewhere around 3% or thereabouts. What would you advise investors to do? Is it the right time to buy? Because it is off its 52-week lows and heading towards its 52-week highs now, around 55, 54 is that level. But do you think at the current juncture, it makes sense to buy into Marico?
Well, Nanta, if you look at the daily time frame chart of Marico, it is a replica of what Tata Consumer has made. So now if you look at on the technical front, it has a very strong base, a double bottom sort of formation can be seen near about 460 levels. So at current level, after a gradual decline that has already been witnessed, I think it's a good entry point. But one should have a time horizon of, let's say, 6 to 8 months at least. So we can expect a gradual up move in Marico as well. So at current level, yes, it can be bought. Existing long position can be hold. Keep a stop loss below 460. From position point of view, 520, 540 could be the levels that can be seen in the near term.
Right. Let's talk about Bajaj Finance then. This company is expected to report its earnings today. Robust growth expected in margins, spreads also, expected. In fact, asset quality is expected to improve on a quarter-on-quarter basis, and assets under management are also expected to grow. What the management commentary, the cues to watch out for from the management commentary would be on how the AUMs will shape up, and what kind of profit the company reports is something that will also be in focus. The expectation is somewhere around 29% or thereabouts. We also have a query coming in on Bajaj Finance, whether it's the right time to look at this counter. Aslam Chauhan has written in and he wants to know your thoughts on this. How would you play this counter ahead of its earnings?
See, ahead of the earnings, yesterday we have already seen a spike in this particular counter. And looking at the overall structure, I think after correction, it seems like it is forming a base. And yesterday, it has already given a consolidation breakout on the daily time frame chart. On immediate basis, we can expect upside to continue towards 6200 to 6300. But yes, it has a major hurdle, major barrier of 200 exponential moving average that is placed around 6380. So roughly around 6400 is acting as a major resistance zone. It is forming a lower top and low bottom formation. So to negate this particular formation, to make a bottom out, I think it needs to take out 6400 levels decisively. Post then we can expect further upside to continue. But as of now, ahead of the earnings, I would suggest, if at all we see any move towards 6300 to 6400, that could be a good exit point for the time being. And post management commentary, we can expect we can probably look at this particular counter from a positional point.
Right, so that's the view on Bajaj Finance. Let's also talk about Mahindra Life. Now, bad set of numbers coming in from Mahindra Life. Profit has dropped sharply due to high base, but revenues are up somewhere around 50% or thereabouts. It's quite it's high. It's off its 52-week highs, and it's somewhere around very close to its 52-week lows, actually around 370 levels or so. What would you advise investors to do with one? Is it time to avoid this, or should one look at accumulating it at these levels and maybe wait for an upside?
If you look at the major structure, we have already seen a good up move in last couple of years. Now, in last couple of months, we have seen a gradual decline. After this decline, this counter has reached to its 200 exponential moving average, and multiple support zones can be seen. So yes, from a positional point of view, one can accumulate this particular counter, keeping stop loss below 325. But from a risk and reward point of view, at current level, I think one should wait for some sort of a decline from trading point of view. And on the higher side, if at all it takes out 400 levels, I would be more comfortable taking long position post then. But at current level, I think it's more sort of consolidation, and the major trend is missing on immediate basis. But yes, from a position point of view, once this consolidation gets over, we can expect another leg on the high side towards probably 450 to 500 can be seen from slightly positional point of view.
Right. Let's now take up a query on Piramal Enterprises. This is coming in from Satya CK, and he's bought it at 880 rupees a share, and he wants to know your medium-term view on the stock. Whether he should hold on to it or switch on to some other counter because he's making a loss in this one. What would you advise him to do?
PEL, if you look at the structure, it is constantly forming a low top and low bottom formation. In last 1.5 years, the stock has corrected from the levels of 1570 to almost levels of 700. So the major trend clearly shows some sort of a weakness can be seen going forward. But the pullback that we have seen recently, that may extend further towards 750 to 800. So a review can be done near about 800 levels if at all we see if this pullback continues. But I'm not comfortable holding it from a longer term point of view. Only from a pullback point of view, one can remain long with the keeping stop loss below 680. So keep a strict stop loss below 680. This pullback, if continues towards 800, probably that could be a good exit point.
Right, that's the call coming in on Piramal Enterprises. Let's also take up a query on Shriram Finance. This one is coming in from Ishu Singh, and she wants to know your thoughts on this counter. Now, this stock has gained somewhere around 18% in a matter of a month, and over the last 5 days also, it's up over 6% or thereabouts. And it's inching towards its 52-week highs of 1509 levels or thereabouts. How would you advise investors to play this one? Is it time to look at this one, buy into it, or wait for dips to get into it?
Absolutely, Nandita. One should wait for a decline to get into this particular counter. The structure looks very strong on the weekly time frame. It has given a big breakout from a symmetrical triangle formation. And if we talk about target for that particular pattern, that comes around almost, it may test its previous all-time high levels of 1600 to 1650. So that's the zone where this stock may enter going forward. The structure is very strong, but this is not a good price to go long. It's already up 5.5% this week in last 2 consecutive sessions. Any decline towards 1380, 1360 could be a good entry point, keeping stop loss below to 1280. The upside is very much open for 1500 to 1550 on immediate basis. From position point of view, a new all-time high can be seen. So those who are already holding the long position can continue to remain long.
Right. Let's also take up a query on KPIT Tech then. Results are about to come in, and on a YTD basis, this stock has gained somewhere around 22%, and mid-cap IT is turning into a flavor for the market given the kind of results that some of these companies have reported. KPIT Tech would definitely be in focus, and we have a query coming in from Naveen. He wants to know your thoughts on this counter. So would you advise somebody to take positions now, or wait for a dip and then get into this one?
Well, Nandita, if you look at the major structure, this counter has been in an uptrend, and I would say a secular uptrend can be seen. It has already been an outperformer since years, and now it is trading almost to its all-time high mark. At current level, I won't advise to go long, but yes, those who are already holding the long position can keep a trailing stop loss and ride this particular momentum. And this has been one of the outperformer, as I mentioned. Overall, Nifty, mid cap and small cap IT, that particular area is looking very much positive. The large cap IT has been the underperformer and looking slightly on a negative side from a short-term point of view. But as far as KPIT is concerned, the upside is very much open for 1,000 sort of levels in next 6 to 8 months can be seen. So any decline towards 750, 700 could be a good entry point, keeping stop loss near about 700 zone. And the upside is very much open for 950 to 1,000.
I also want to talk about rail stocks. They've been on a tear, and RVNL in particular over the last 2 sessions, we've seen double-digit percentage gains coming in on this counter. We're getting a couple of queries on this stock. Alex has written in, and Ayush Singh also has a query on the same stock. So Alex has bought RVNL at 72 rupees, and he wants to know whether he should be holding it or selling it at the current levels. What would you advise him to do?
Well, it's a very good entry point. The stock has given a big breakout from the levels of 81. So now I think this momentum looks very strong. Yesterday it was already up close to 19%, and the momentum is very strong. So we can expect further upside to continue towards 150 to 120. Probably near about 120 could be a good price to book profits, or one can keep a trailing stop loss near about 95. And apart from that, in this particular space, as we mentioned, the overall railway counters were in focus in last couple of trading sessions. So Tex Meco Rail, this particular counter is also looking positive, forming a rounding bottom sort of formation. The structure looks very much positive for 58 to 60 sort of levels. One can keep a stop loss below 51 for the long positions.
Right, that's the view on RVNL. Well, with that, we are completely timed out on this edition of Morning Trade. But Nilesh, before I let you go, leave us with some stock recommendations for our viewers this morning.
Right, so I have 2 buy recommendation. First, index heavyweight L&T. This particular counter has witnessed some sort of profit booking last few trading sessions back, and now it is showing some sort of a reversal of the trend. The upside is open for 2350. So that's the previous high that may get tested going forward. So one can buy at current level and on decline, keeping stop loss below 2180. The upside is open for 2350 on immediate basis. The other counter is we are liking from the banking space, IDFC First Bank. This particular counter has given breakout from its descending triangle formation and looks positive for 61, 65 sort of levels from position point of view. One can keep a stop loss below 56. Decline can be bought into. So these are the 2 specific counters that we are liking as of now.
Well, those are the stock recommendations coming in from Nilesh this morning. With that, Nilesh, thanks a lot for taking out time and sharing your thoughts with us this morning. With that, we are completely timed out on this edition of Morning Trade. So it's a goodbye from me and the entire team that put the show together. But don't go anywhere, because coming up next is Opening Bell.